Good morning, everybody. Hey, welcome to Monday. This is the last week of April. Hard to believe that we're almost done with the first month of this second quarter, but it is here. Hey, last week, it was an up and down week. We ended up so for the week. We'll talk about that more with some earnings stuff coming out, Coca-Cola this morning, when Dave joins us here in just a few minutes. Before we do that, though, let's not forget that there's so many things in this world that you and we just cannot control. However, you can control your retirement portfolio by determining how much risk you have and making sure that that risk lines up with the amount of risk you should have in your portfolio based on your age, how long till retirement, and such as that. Give us a call, 863-382-0037, and let's walk through our core retirement design, helping you design the retirement you always dreamed of. We got Dave coming up next.
Masterful lyrical stylings of the B-52s there. I'm Morning Dave. We're at 8:40 now. It's 20 before 9. Let's check in on your money and see what the lyrical stylings of Phillip Statler are like from down at Statler Financial Services, because we actually had, believe it or not, some green ink to close off the week. Not very much, though, right, Phillip?
That's right, Dave. Hey, we ended up the week okay. However, I will say that I think overall the week was down, if I remember right.
We didn't gain a whole heck. I didn't see a full week number in the process, but we didn't gain much on Friday. I know that. The Dow was only up by 22. Standard & Poor's was up by a little under 4 on Friday, and NASDAQ was up by just under 13. I'd call that, it was green, but it was seafoam green at its absolute best, and then pretty much all heck broke loose on the gossip mill over the weekend. Bed Bath & Beyond officially filed for bankruptcy. NBC, Comcast, fired their CEO for fishing off the company dock. And the big title really in terms of market-moving stuff is the lead story on one of my tip sheets is the Moody's rating service downgraded 11 regional banks, and that includes some pretty big regional banks like U.S. Bank, Zions Bank, and the like. You and I were talking about the banking industry last week as earnings season started to get in earnest, and Lordy, I mean, the regional banks are not in as good a shape as we all hoped they'd be, right?
Well, that seems to be the indication, Dave, what we're getting from the earnings front and such as that. So it's going to be interesting to see how the rest of the regionals play out, because there's still more coming this week. And so that could give the markets and the traders something to really digest.
Could be interesting. We're talking about banks and whatnot down the line. We don't have their actual report, but Credit Suisse is supposed to be reporting their quarterlies. We don't have their bottom line numbers yet, partially because they're overseas. But in their final days, they had a $75 billion, with a B, $billion in withdrawals, exodus out of Credit Suisse. I mean, I was flippantly saying before we went on the air, how do you say Silicon Valley Bank in Swiss? It kind of looks like it, doesn't it?
It does. There definitely has a mass exodus there. But so we continue to, you have to monitor the banking industry to see what's happening there. And that's going to put a drag on credit, right? Because the banks are suffering. They're not going to have the dollars to lend out, which means we're going to see a credit tightening on the business front.
Which probably makes the Fed happy. But yeah, when we start seeing the big regionals ending up in trouble, I mean, locals generally in pretty good shape because they've got their finger on the local economy better. But these regionals that are getting beat up, they get a little adventurous and they do it. That's where the larger small business loans come from, the regional consortiums of banks. And when they get tight, we're going to see a really rapid tightening of credit, I suspect.
Yeah, I think so. I think we're already seeing that. Some of the reports that I've seen come across have indicated that is an issue for some of these small to mid-sized companies that are in that and that are traded public. That it means that they're probably in that $100 to $500 million of gross revenue.
Absolutely. One of the headlines that neither one of us found the details on yet, but I saw it go by on one of my tip sheets. One of the stock market analysts out there saying there's still a 15% headroom that he expects the market to drop before we actually come out of this and start looking at things looking up again. I'm hoping to heck he's wrong, but there are clouds on the horizon. If the banking industry has to tighten up in order to stay profitable and stay in business in a healthy fashion, that credit tightening could very well be the first harbinger of that decline.
It could, and like you said, the Fed is that's what they want, right? They want the economy to tighten up, and the banks are helping out.
Absolutely, and we've only got one more week left. It's next week that the Fed meets for their next interest-setting meeting, so a lot of the stuff they're seeing right now is going into their equation as to how the Fed governors are voting. I got to make mention of one of the things that they actually reported their earnings this morning, but Bed Bath & Beyond formally went bankrupt over the weekend. And I noticed the last time I checked their stock, they were down to 19 cents a share, and believe it or not, that's up from its dip about 4 a.m. on the futures.
It's actually trading right now at 22 cents a share. So,
Ooh.
Yeah,
you could be making 10% on your money.
Crazy.
It's interesting. I was reading on that. That might be one of those textbook things that'll get studied in business school. They threw their CEO out after they didn't respond fast enough to the internet challenge against brick and mortar stores, and started all over with a new CEO who moved a bunch of private label brands into Bed Bath & Beyond, which wasn't what people were shopping at Bed Bath & Beyond for, because they specialize in the name brands, and that just brought the store's traffic down even farther. I mean, somebody's going to write a textbook about Bed Bath & Beyond one of these days.
Yeah, it'll be the study for finance class.
I suspect it will be. It's going to be a busy week as far as earnings. I mean, Bed Bath & Beyond, okay, fine, 20 cents a share, what the heck. But we got pretty much a Super Bowl of reports coming up this week. Among other things, we're going to get the big tech stocks, Meta, Microsoft, and Amazon, all due to report this week. There's going to be a lot of market-moving reports coming out as this week progresses.
Oh, yeah, definitely. I mean, we got like 3M, Kimberly-Clark, a lot of household names coming up in the next few days.
And we're also looking at a few economic indicators, none of the earth-shaking ones today, but we're going to get some stuff out of the Chicago Fed, their activity index, and the Dallas Fed surveys and whatnot. We're going to keep getting a drip of information as far as how business conditions are going in the various Fed districts around the country, and we'll get a pretty good picture in advance of that Fed meeting next Tuesday and Wednesday as to what they're going to do as far as interest rates are concerned. We all try to read tea leaves every day.
Yeah, and I think Thursday may be a big one, Dave, because we had the first blush of the GDP number for the first quarter.
That's right. That's due out this week as well. And they're expecting a 2% growth rate. If we're way over it, we'll all say, oh, no, higher interest rates. If we're way below it, we're all going to go, oh, no, sell everything like chiclets. I don't think anything other than 2% nuts on is pretty much going to be about the only choice we have for no movement.
Well, and I'll give you, see, that's the thing when you look at surveys of analysts, right? Because my analyst, the survey comes in at 1.8% is the expectation. Yeah, exactly.
So depending upon who you follow, you're either going to be really happy or really miserable.
Yeah. So the median forecast for the group that MarketWatch really kind of follows is 1.8%.
Okay, I was getting two. We're within the same zip code of each other, but on a number that doggone big, 0.2% is a whole lot of bucks, isn't it?
Yeah, it really is in this case.
Absolutely. It is earnings season because it's Monday, and not a lot of companies are actually putting out details before the market begins. But we did get one big one in, and who doesn't drink some variety of Coca-Cola or do some business with the company with all the branches they've got? How did they do?
Exactly. Coca-Cola actually has been able to do pretty well. They've been able to raise their pricing to help mitigate the impacts of inflation. So they literally came in and beat expectations at 68 cents a share, which was 4 cents better than expected. Even their gross revenue was up almost 0.2 billion, better than expected. So they're getting a nice bump this morning. Probably the biggest bump they've had all year this year, up 1.7% right now.
We'll take that happily. It's a good indicator to start the week out because quite frankly, we don't have a lot of other good news out there. Setting the table again, it was just the most modest of all possible levels of green ink on Friday. 45 minutes before we open after kind of an eventful weekend. What are we doing so far on the futures, Phillip?
So it's it's just a tinge of red, Dave. Just a tinge. We've got the Dow down 0.1%. The S&P 500 is down $1.08. So I can't even say it's 0.1%. The tech stocks, the Nasdaq 100 is basically flat right now, and as well as the Russell 2000's flat. So everything's kind of in that wait and see attitude right now. On the other side, we've got silver trading up 0.25%, gold up 0.2, still below 2,000. And then we've got crude oil down another 0.6 to $77.40 a barrel right now, Dave.
I've said before, I wish it wasn't because of lower economic expectations, but I like lower prices on oil. The Asian Rim market was kind of a mixed bag. The Japanese markets were up at the close this morning, but the mainland Chinese markets in Hong Kong were off precipitously, like over 0.5% in Hong Kong, 0.75% on the mainland Chinese markets. In Europe, we got a mixed bag there as well. The overall index for the European community was off slightly. I've got the British, French, and Italian markets all off by almost 1% halfway through their day as it updates. They're kind of cynical as well at this point in time. Retirement's coming up for a lot of us. For some of us, it's 25 or 30 years, you lucky dogs. For the rest of us, we got some last-minute planning to do. I know you can help both of us, Phillip. How do we find you to get the plan done?
Dave, that's exactly when we developed our core retirement design to help folks design that retirement they always dreamed of. They can give us a call, 863-382-0037. I want to take this opportunity to thank everybody. We had the Best of the Highlands Awards on Saturday night, and we finished in first place as the best financial planner. So thankful for all those that came out and did a little voting. We appreciate that. And
my standing ovation goes to you. I'm happy for you.
And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow, same time on Light FM with a whole potload of earnings to talk about. You have a good day, and we'll see you then, Phillip.
All right, man. You too.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope that your week gets off to a great start today. Join us again tomorrow, same time, same place. Until then, have a great day.